Hello traders, welcome to my channel once again. If you are new, please do subscribe. This is a pre-week market outlook. Uh, Subscribe to my channel, hit the like button. If you have any comment, please do drop it at the comment section and share my video. Today I'm going to be analyzing GBPUSD against week ahead. All right. The first thing we do as traders, we first of all bring out what we call forex news. All right. For us to know what, go to forexfactory.com. You check out the news for the week. Click on calendar. Update the the calendar table on Monday 9:15 a.m. we have the French flash French news about the PMI. The forecast is 44.3. Then the actual will be shown when the news is read at 9:15 a.m. Also, in this thing has a very great impact on euro. So if you are trading euro, if what you trade is euro and other pairs, please be ready. Euro, and from here up to this point, it's about euro. Then we have the British pound, then the USD. So if if you have any currency pair uh, that is associated with all these things, please get ready. The market is going to move as soon as the news is released. On Tuesday also we have high impact on AUD, JPY, Bank of Japan, and all that. So the week is going to be a very busy week. That being said, let's move on to the chart. All right. Normally, you just go check the week. It's bullish. It's been bullish, even though there was a pullback a little. It's bullish. Then the daily is bullish. The 4 hour is bearish. All right, it's bearish. The 1 hour is now bullish. The 15 minute is also bullish. And one thing, guys, that we should understand as a day trader, if you're a day trader, don't get confused because of the time frame. If the daily time frame is bullish, okay, you know the directional bias that daily is bullish. But majorly, what you should be concerned about when you are trading is from 4 hours down. All right. The daily time frame is for you to check what is really happening because on a daily basis, it's only one candlestick that you are going to see. If it's bullish, you just see that it's bullish. It will push up. Then if it's retracing, it will be having a pullback. Same candle. To go up, it will come down. To go up, it will come down until that day closes before another candle will come up. Then 4 hours. All right. As a day trader, 4 hours is what you should be correlating your time for execution with. Now, what do I mean by that? If 4 hour is bearish and you scale down to 1 hour, 1 hour is bullish. All right. You scale down to 15 minutes and 15 minutes is bullish. You wait until the 4 hour and your 1 hour, your 15 minutes correlates. I will say that again. Presently, 4 hours is bearish, but is having a pullback to become bullish. All right, it's still bearish, but is making a pullback to become bearish and to become bullish. Now, as a day trader, what you should be concerned about is before you shoot your shot, wait for 4 hours to be bullish, to get bullish. Right now it's still bearish. 1 hour is already bullish. 50 minutes is already bullish. So be patient, wait for 4 hours, wait for this time frame to correlate, to be the same thing. You wait until 4 hours turn bullish, then you enter the market. That is when you have a push, a very big move. All right, that's what smart traders do. That being said, this is the chart, and at this point, we have a high here. All right, when you follow this pattern, you discover that this is the highest high. Let's mark it. But as the market pulled back, it made a W pattern. All right. Then anytime you see a push down, anytime there's a pattern formation and the last leg pushes down, please take note. You know that the price will rise, it will be going up. But if it is up, you see a high, a push up, all right, down, up again, down, up again, then you sit down. This leg will not. Okay, let me show you guys so that you understand. Price is coming up. It got to this place, it will come down. As it's going back, it stop here. When it's coming down, it breaks this down. It comes here again, tests this place, then it drops. So this is the pattern that happens or that always occur at the top resistance level. But this pattern here is what usually occur at the support level. Price has been coming down. It got to this point, it went like this. All right, it came down, break the structure down, then it will start going up, make a pullback, your entry, then it moves. All right, so just take note of these patterns. This is what reoccurs every day. When there's a push phase, a corrective phase, and the market is going like that, if it's bullish, market will be bullish, but it will get to a point that market will have to correct itself before it turns bearish. But if it is bearish, it will come down to a support level where market will correct itself before it will reverse. For it to reverse, it's going to print what we call pattern. This is pattern formation. All right, there will be a pattern that the price action has to print. That is when you know that correction is going on before it makes another move. So at this point now, there's a pattern going on. All right, there's a pattern going on. For you to see it more clearly, more in a very clearer picture, you scale to the 5 minutes. And another tips, guys, on a higher time frame, you hardly spot a pattern. For you to really see pattern formation, for you to see the clearer picture, please I advise you scale down and always use this tool that we call there's a tool we call Eclipse. All right, this Eclipse is very, very nice for you. You just mark it and over it, around it, it will show you the real picture. Please endeavor to use that tool. It's there, it's free, and use it so that you can always see the clearer picture. Right now, pattern is forming. All right, you can see, you can even see this here is the last. Okay, this one is the, hold on guys, so that you understand this thing very clearly. This is the last swing, the swing low. All right, this is a pullback. This pullback, all right, this is a pullback. Then price is still heading up. You can bring your trend line, plot it, and all you need to do is wait for price to either break this structure up, all right, test this high, retrace, and you buy, all right. Or if it gets here and it found a resistance, you will see a pattern formation that will signal a reversal. All right, now what is the pattern formation that you will see here? This is the pattern formation you will see. Hold on. You see a pattern formation at the top here. You see a pattern formation uh, like this, because this price will be coming like this. If it breaks this place, it will go up, all right, make a high, all right. When after that, it will come down, all right, it will come down, all right, retest this level, then come up a little. It will not take this high again, stop shy here, all right. Then it will come down, break the structure down, all right. Retest this structure, then your entry. Retest this structure, then retest this structure, then before it will drop. All right. So guys, as far as I'm concerned, a still bullish trend. The still bullish trend is going to push a little higher, but watch out once it breaks. If it once price action breaks this high, all right. So watch out once it breaks this high, it's going to go up, push up, then come back to retest this structure. Then here you see a pattern formation. You see a pattern formation. First, it will make a swing high to create another high. Once it creates another high, that means you have to watch out for it to give you another formation to signal if it's still going to go higher or if still coming down. So if you print this kind of M pattern, that means price is coming down. But if it gets to this place and it prints something like this, if price makes another high, if price breaks above this rate, makes a high, then come back, okay, retest this structure, move a little higher, come down again, all right. Once it comes down again and breaks this structure a little low, then price will have to go up. All right, this is a W pattern. How do you know that it's a W pattern? Once it comes back to, once it make a swing low, it will make a pullback, then it will now break the structure low. Once it breaks the structure low, then it will automatically follow by breaking of structure this Um, this lower high, once it will automatically breaks the lower high again to the upside. As soon as it does that, then there will be a pullback. There will be a pullback for you for it to test this structure. There will be a pullback for you to test this structure. All right, for you to test this structure, then your entry will now be somewhere at this point. This that will signal your entry to the upside. So watch out. As far as I'm concerned, the directional bias for GBPUSD is still bullish. All right, it's still bullish. I see price still going higher, but if it holds here, there will be a pattern, M pattern, or double tops that will tell you that will signal a reversal. All right, but if it breaks above it, it will come back to retest this same high, this last high, then create a pattern, then it will now start going higher. All right, now there's one thing I want us to understand, which is in a forex market, as a day trader, your higher time frame that you should focus on mainly. You check the daily time frame to know your directional bias. If it's bullish, you know, okay, it's bullish. If it is bearish, you know, all right, it's bearish. Then scale down to 4 hours. Now, 4 hours is what you should always concentrate on when you want to uh, execute any trade. 4 hours and 1 hour, 4 hours, 1 hour, 15 minutes, or 5 minutes, they must correlate before you make any entry, before you place a trade. And when you are doing your analysis, do well to scale down because there are a lot of information, more information as you scale downwards. It will help. And don't also forget to use this tool. It's a free tool, this Eclipse, all right, to mark out where the pattern is forming. Once you mark it out and you scale down, you'll be able to see a lot of information. It will give you a very good view to actually know that pattern is printing. So, guys, I want you guys to test this strategy. Test it very well, test it out, and drop a comment at the comment section. What makes you to know that price is about to correct itself is when it's printing pattern. And the most patterns that reoccur are in on the charts, all right, that price action replicate every time is mostly uh, W pattern that usually occur at the support level or double bottom, bottom. Then at the resistance level, we have the M pattern. So on the M pattern also double tops. We also have head and shoulders. All right. So once you see all this formation, all those pattern forming, please get ready. That is about time for market to correct itself. If it's been bullish, it has to correct and to come bearish. If it's been bullish, it has to print that pattern, then it will now start correcting itself. And don't forget, watch out for overbought and oversold condition in the market. Don't forget, guys, when you want to buy anything, you buy from the support when it's bullish, you buy from the support when it's bearish, you buy from the resistance. So we buy low to sell high, then we sell high to buy low. So guys, thank you and have a blessed week ahead.